What's up, apes? Welcome back to the Daily Peels podcast / video stream of the day. My name is David. It is currently 10:21 p.m. on this beautiful Monday, July 8th, 2024. Thank you all for joining me once again. And apologies to everybody watching on YouTube for this ridiculous glare. It is so late, so you're getting glasses Murph here. I took my contacts out for the day. Spoiler alert, I do wear contacts. I know it's hard to believe I'm not completely a genetic perfection, marvel of the human species, as most of you assume. So, no, I do hate to dissuade that idea. But, in fact, if you are watching on YouTube, I would strongly recommend going over to Spotify so you don't have to deal with this fucking reflection in my glasses the whole time. I was trying to figure out how to get it off, but nonetheless, it is here to stay, apparently. Either way, let's go ahead and talk markets for the day. When we're talking about WSO Alpha, there really isn't anything to say. The portfolio was up / down a massive 0.00% for the session. We lost an astounding $24 for the day. Meanwhile, the S&P 500 was up 10 basis points, while the NASDAQ was up 28 basis points. Now, we did see some actual action from the Russell 2000 of about 70 basis points. This is actually down intraday. It did open on a much higher note. A lot of people are starting to think about, if... Like, there was this piece that was published, I forget who wrote it, but talking about the structural disadvantages to the Russell, because basically when its stocks run up, they automatically have to sell them because they're going to go into, like, the larger cap index for the Russell, or they're going to go into the S&P 500. Now, if you ask me, the stock is running up, so that means you're selling at a high point. So I don't really know. It's the Peter Lynchian idea of hold on to your winners and trim your losers. That's what the S&P 500 does. So, there's differences in incentives there. But nonetheless, let's go ahead and talk about some of the major stories of the day. So moving down into the banana bits. First of all, very strange here because apparently Corning, which is like a specialty glass maker, they make the Gorilla Glass that's in your iPhone right now, and the iPhone that I'm currently, unfortunately, staring at this glare back at me. I can't get over this thing. But nonetheless, Corning is a specialty glass maker. They absolutely ripped on solid earnings. Apparently, artificial intelligence is helping them out. I'm pretty sure it's in the design of the glass or something, but who knows? Apparently, AI is here to take not only human jobs, but inanimate object jobs as well. So we'll see how that goes. Next up, check out that primer. FactSet put together. FactSet does great research. Sign up for FactSet Insight. It is sweet. It's completely free, and they actually give you some good research, some raw data from the product itself. So go ahead and sign up for that. But they put together this primer on bank earnings because they're coming later on this week. So definitely go ahead and check that out so you don't go broke on Thursday and Friday. Meanwhile, alliances are finally starting to form in the streaming wars. We're seeing Paramount actually finished its deal, which I'm going to talk about in just a quick minute. But more importantly, it seems like they're trying to ally with literally anybody who's going to have them, because besides Top Gun Maverick, they have absolutely no content on Paramount Plus. I don't know who the fuck would ever pay for that unless it was part of some kind of a bundle, because what else? Is like the Real Housewives on there or something? Like, I honestly don't know what any of their titles would be besides Top Gun Maverick. But nonetheless, there's a lot of alliances forming. The streaming market is finally maturing, is what that means, as it enters into that consolidation phase. It's hard to believe that it was a decade ago that the streaming wars really started to heat up with Netflix and Amazon Prime, and then much later, you get guys like Disney Plus and all that other shit going into the market. Really, the only ones you need are YouTube TV, Netflix, and HBO, and I will stand on that all day long. All right, finally, if you think fundraising is hard for a startup, for literally anything, imagine trying to fundraise for the Biden campaign right now. It is basically impossible. That's asking you to rectify gravity with quantum mechanics. It is an impossible task whatsoever, but nonetheless, they're trying their damnedest, but it is definitely not going too well. Anyway, before we, say something that's going to get me fired, let's go ahead and move on to our big story of the day. We are talking about ice cream turning into milkshakes. Of course, not literally. We are just so poetic over here at the Daily Peel Global headquarters that we like to indulge a little bit and have a little bit of fun with you guys. But nonetheless, that is the perfect metaphor for consumer spending. And the reason that I was thinking about it was because this past 4th of July, 4th of July is generally the only day of the year that I go outside, so it was my first time touching grass in roughly the past year or so. Covered in a waterfall of sweat, I was reminded of the brutal reality it is of living in the South in the summer. It's absolutely terrible, so I can't wait to go back to the Northeast. Actually, we did get a house, by the way, which I'm going to talk about in tomorrow's edition, but nonetheless, completely ridiculous. A melting ice cream cone is the perfect way to summarize consumer spending going forward. So we were thinking about this over Independence Day and the weekend following. I personally celebrated the way that independence should be celebrated, independently. So that was a lot of fun. But nonetheless, let's go ahead and talk about some of the data that's been published recently. So we talked a little while ago about the Bank of America consumer checkpoint for the month of May. They haven't released theirs for the month of June yet. It's probably going to come out later this week at some point. It's usually around the same time as CPI. But we were talking about this chart, which is showing you some of the key lines of discretionary spending. Obviously, these are not trending in the right direction. So that's a little bit concerning when it comes to the consumer spending side, but it's still growing, which is all that matters. In case you don't remember, we were up 0.7% by Bank of America's credit and debit card spending for the month of May. And so still trending upwards, but the problem is that it's now falling below inflation. Real wage growth is gone once again. So we are seeing rising unemployment. We're seeing slowing wage growth. We're seeing slowing consumer spending. And meanwhile, we just got a report from the Federal Reserve yesterday talking about consumer credit growth. Now, it wasn't anything crazy, but when you look at this chart, it definitely isn't reassuring. So what we're looking at here is the percentage growth rates year over year for different lines of consumer credit. So what we're seeing in this lighter blue line is revolving credit, basically credit cards and any other kind of like revolving credit draw that consumers have. Meanwhile, this darker blue line is the total credit growth. So total credit growth for the month of May was at 2.7%, whereas if we go to revolving credit, aka credit card spending or credit card balance growth, that is up a solid 6.7%. So while all of this is going on, all of this meaning slowing spending, slowing wage growth, rising unemployment, we are also seeing rising debt balances, and interest rates haven't gone down yet. Market still doesn't think they're going to go down until at least September. That's what they're pricing for, about 93% odds of holding the same at the end of July. I personally think that, there's a much higher chance that the Fed could cut at the end of July. We are going to get a CPI and a PCE report prior to this next meeting. So if both of those continue their trend of going lower, then maybe we could actually see some cuts starting at this meeting. Keep in mind, 𝗟𝗂𝗟𝗚, when he was at that central banking conference in buttfuck Portugal, wherever the fuck it was, he said that, we're right there. We're like right at the goal line. We're at 2.6% annualized inflation. But that guy's biggest fear is being Arthur Burns. He looks at that chart of the Arthur Burns Federal Reserve chairmanship, where it basically is spiking up and then it starts tricking back down a little bit. So they start cutting rates and then it shoots right back up again. So that is the opposite of what they're trying to create. So they're kind of the explicit purpose of raising rates is to stop this. And clearly it's not working too well. So you might as well cut the economy some slack, because at the end of the day, everything goes back to consumer spending in the United States. When we're talking about macro, we're talking about economic growth and how everything kind of ties into the broader narrative or the larger picture. The bigger picture is GDP growth. That is really, like at the end of the day, that's what matters. And all these indicators are just kind of pointing towards that and what it looks like going forward. Real GDP growth, I should say, that's the thing that everybody cares about. And so consumer spending, it's just a light 70% of total GDP here in the United States. So if we start to see that falter, god damn it, run for the hills. I hope you got your bunker built. Let's go ahead and move on into some of the big stock movers for the session here. I'm going to take this chart off, even though it does look pretty. Nonetheless, we are talking about Morphic Holdings here. This is a biotech company specializing in bowel disease, and apparently Eli Lilly was smelling nothing but opportunity with this company here. So they figured they would go ahead and buy this company for a fatty premium. To take a step back, Morphic Holdings, it's a company that was founded in 2014. It's based out of Waltham, Massachusetts. They're not pre-revenue, but they're basically pre-revenue because of the volatility that revenue sees. It's like tens of millions one year and hundreds of thousands the next year. It just depends on the product pipeline. And that's normal for these biotech companies. But Eli Lilly said that it's basically it's this drug for inflammatory bowel disease, which I definitely don't have. It's a drug for inflammatory bowel disease that is entering its phase 2 trials, and that's basically why Eli Lilly is going after this thing. They're looking to unconstipate the irritable bowel disease market, inflammatory bowel disease, whatever the fuck it's called. I wouldn't know because I don't have it. Now, this is already the largest healthcare company in the world. They are starting to get even larger. Jim Cramer was out there yapping today about how non-tech companies can become mega cap. Eli Lilly is at like $900 billion. So Jim Cramer was talking about it. Probably go short Eli Lilly if it was me. But nonetheless, Morphic Holdings is being acquired for $3.2 billion. That is a 79% premium from Friday's close and an 87.2% premium from its prior 90-day trading average. So good for them. That's a big fat payout for the fellas. All right, moving on down into SolarEdge. SolarEdge got slapped with a much-needed upgrade on the session. So Bank of America came in with the alley-oop, basically said that the stock is trading way below where it should be, so they traded up about 9.3% for the session here today. Wasn't really any other major news, but the rest of the solar industry got in on the gains. Moving on down, we have Paramount Global. So the stock was obviously down on the day, but I'm happy to see this news, not necessarily for the losses registered by shareholders for the session. It was down about 5.3% for the day, but more just because the fucking shenanigans of this transaction are finally over. So we have billionaire David Ellison buying from billionaire Sherry Redstone. This might be how billionaires flirt, quite honestly. You know how, like, in elementary school, like the girls would steal somebody's hat and the boys would like pull hair or like chase somebody at recess, basically. That's basically what these billionaires are doing. They're like, oh, do you want to buy it? It's so, the sexual tension, you could cut it with a knife, quite honestly, but they're, 70 years old, so I'd rather use that knife to gouge my own eyes out than cut any kind of sexual tension. But nonetheless, the deal is officially going through. Skydance, Redbird, and KKR are leading the consortium to outright purchase National Amusements and put some fatty investments into Paramount Global. So they're buying out National Amusements, which again holds like an 80% stake in Paramount by voting classes, for a solid $2.4 billion. They're putting in an additional like $6.5 billion in total. It's basically an $8 billion or $5.5 billion. It's basically an $8 or $9 billion acquisition price. It's quite complicated, and I haven't looked into it in its entirety, but I am going to tomorrow because that's going to be our thought banana for the day. But either way, Class A shareholders are getting $23 per share. B holders are going to get $15 per share. It's some combination of both cash and stock for it to actually go through. Nonetheless, I'm just glad I don't have to fucking... After tomorrow, I'm done talking about Paramount. I hate this fucking company so goddamn much, and I hate Paramount Plus even more. Anyway, let's move on to a company that I hate just as much, Chipotle Mexican Grill, the most overhyped fast food, if you can even call it fast food, in the entire world. My little brother does work there, so he's not going to like that very much. But they were down 5.2% on the session, rightfully so, because the stock was running up in anticipation of the 50-for-1 split. A stock split is literally meaningless to a company, so I'm sure this was sharp institutional investors just riding the retail pump and dump. So it was good to see that they got some liquidity to sell into. Nonetheless, there was that damning analyst report from Wells Fargo that showed quite the distribution in portion sizes. He basically ordered the same bowl at 75 different Chipotles, and there was quite the variation in portion sizes. Definitely go check out the Yahoo Finance article if you want to read more about it. That's the kind of channel checking that we are here for. That is due diligence, if you ask me. Nonetheless, stock again is down 5.2% for the day. All right, moving on into our thought banana for the session here. We are talking about the Battle of the Southwest, or more specifically, the Battle of Southwest Airlines, the company, because the last Battle of the Southwest in the United States, what is it, like the fucking Alamo or something? The Mexican-American War, we don't have to get into that tragedy of human existence. But nonetheless, activism. Let's go ahead and talk about some shareholder activism. So there's a lot of different forms of activism in the world. You could be like Greta Thunberg and decide to stop going to school at age 14, scream at politicians at the World Economic Forum, block traffic, desecrate sacred objects, basically all the worst things that a human could do. Or you could go on the exact opposite end of the spectrum and be Elliott Management and just kind of publicly bully whatever it is that you want to change. So again, this is that like horseshoe theory thing where like two ends of the spectrum actually kind of converge. And it seems like the same thing is true when it comes to overall activism. Now, when it comes to shareholder activism, hardly anybody has a more Grim Reaper-like reputation than Elliott Management. But nonetheless, when Elliott announced that they were making an investment in Southwest Airlines, it was actually pretty good for the stock, and that lasted about 5 minutes, as we can see by this chart right here. So this is June 10th, 2024, when Elliott announced a $1.9 billion stake, amounting to roughly 11% of Southwest Holdings' total value. So the stock obviously spiked, and it has traded down since then because analysts are like, well, what the fuck are you going to do? You bought 11% of the company. You haven't said any kind of plan. Basically, the three-pronged plan that Elliott has come up with so far is fire CEO Bob Jordan, fire Chairman Gary Kelly, and allow John Pollock, the CEO of Elliott Management, to let his son fly in the cockpit of every flight going forward. It's got to be something like that because nobody fucking knows why else Elliott decided to take a stake in Southwest. It's very unusual for activist management to come into airlines because it's such a regulated industry for obvious reasons. Not that Boeing would know anything about those regulations, but it's obviously a very heavily regulated industry. So it takes a while to change anything in this space. Maybe Southwest is in it maybe Elliott is in it for the long haul, and that's why they're taking their sweet time coming up with their game plan. But nonetheless, Southwest has already decided to shoot itself in the foot and basically reject any help that they could get. So When it comes to companies like Salesforce and like some of the other ones that Elliott has gone after in recent years, quote unquote, gone after, the management teams at least act like they appreciate the constructive criticism. Mark Benioff said something like, "Oh, it's been a pleasure meeting the Elliott team." I'm sure he goes to bed at night with a gun halfway in his mouth, just waiting for them to fuck off. But still, he at least puts on a happy face out in the public. Southwest did the complete opposite, and they adopted what's called a poison pill. Basically, a poison pill is a way overly dramatized Wall Street term, because they tend to like to do that, that basically says if a shareholder gets above a certain level, in this case for Southwest, it's 12.5% ownership, then that automatically triggers a stock sale where existing shareholders, besides the one that owns 12.5% of the company, are going to be offered discounted shares. So it would be ridiculous not to buy those because you automatically register an economic profit. You can sell them back into the open market as long as Elliott doesn't buy them. Then it's all good from that point going forward. So we'll see what happens. I mean, Southwest is clearly not very happy with this, even though they're acting like they're ready to take the constructive criticism, but it's definitely not going to happen going forward. Speaking of airlines and what a dumpy ass shitco investment they would be, let's go ahead and talk to the man himself, Mr. Richard Branson, for our wise investor quote of the day. This is a classic one. You all know it. He said, "If you want to be a millionaire, start with $1 billion and launch a new airline." Great practical advice that the everyday man can get behind. So shout out to Richard Branson for that elucidation that he's blessing the public with. Nonetheless, that's about it for the session. Like I said, I did buy a house, so I'm pretty fucking hyped up about that. And that's a big reason why I'm coming at you so late today. I was also busy losing a softball game and probably tearing my ACL in the process of doing that. Nonetheless, I can walk and I'm actually chilling with my ACL very much not teared right now. So it is 10:37 p.m. Let's go ahead and call it a day. Happy investing, happy trading, and bye now.